and silver are handily outperforming. And that's telling us that what the central banks that have been accumulating more gold than they ever have since they began tracking, because they know what they're doing to destroy the currencies. And I saw this yesterday morning on Bloomberg now, where they were touting the devaluation trade. So that means that destroying the value of the currency, the purchasing power value of the currency, is now a good thing. It isn't a good thing. But the fact that they're touting that blows my mind, because they don't really want the public to understand that this inflation and this devaluation is really not necessary. But that's how far the markets have been degraded.
Gold is rising to record highs. A breakout in silver is imminent. The trust in paper money is also eroding globally. According to Lynette Zang, this is the last stage of the global fiat experiment, not just another cycle. Central banks are ensnared by inflation, governments are drowning in debt, and the average person is witnessing the daily depreciation of their savings. Zang cautions that the financial system will undergo a total overhaul rather than a reset. In this video, we dissect her most recent caution and explain why she thinks gold and silver are not only investments, but also lifelines in the impending financial storm. Don't forget to like, subscribe, and ring the bell for the latest analysis on gold and silver markets.
Which frankly, I don't think I've ever seen before. It's crazy. You can look on the chart and see it's just this huge double cup from I think 81 or something like that until 2011 or 13, something like that. And now the next cup concluding. I mean, this is major. It's that close. But once you see that breakout, then technically I would expect a bigger surge in the spot silver price. Quite honestly, Charlotte, I believe that we are in the melt-up phase of these markets, where no matter what happens, you're just seeing surges. And you're seeing that in the stock markets as well as the crypto markets. And the interesting thing, though, right now, if you go back to the beginning of the year, what you actually see is that while everything is going up, the spot contracts on gold and silver, and particularly silver, are much stronger and more powerful than those prices that we're seeing in the stock market or even in the Bitcoin market, in the crypto markets. Gold and silver are handily outperforming. And that's telling us that what the central banks that have been accumulating more gold than they ever have since they began tracking, because they know what they're doing to destroy the currencies. And I saw this yesterday morning on Bloomberg now, where they were touting the devaluation trade. So that means that destroying the value of the currency, the purchasing power value of the currency, is now a good thing. It isn't a good thing. But the fact that they're touting that blows my mind, because they don't really want the public to understand that this inflation and this devaluation is really not necessary. But that's how far the markets have been degraded, and the currency markets have been degraded. And so this surge in both the spot prices on gold and silver is a huge indication of that. Well, if I'm right, and what time is going to tell, I'm either going to be right or wrong, but if I'm right, and if this is indeed the melt up part of this phase, then I will expect everything to continue to climb, because this is the end game for the fiat currencies. And the only tool that they have is, they want more debasement. And it really is an indication when they're talking about that as a good thing, a debasement trade. Are you kidding me? Oh my God. I mean, people don't realize how significant that is. But, the U.S. is now in a government shutdown. And there is even discussion as to whether or not the furloughed employees would be getting their back pay. And yet the stock markets are surging higher. Well, it certainly makes sense with all that uncertainty for the spot gold and silver markets to surge higher. But again, not the stock markets. That, of course, is because we are at the end of this currency's life cycle. And now the markets are believing it. I can't even stress how important Wall Street touting the devaluation trade is. As so blatant, so incredibly blatant. It's kind of mind-blowing. I just got back from doing the Nomad Capitalist Live event, and it was a phenomenal event. And you know, I talked about what I talk about with you, and I showed the charts and all of this. And this was not an audience that was familiar with me or my work at all. And afterwards, I was kind of mobbed, and the response was, you know, I knew things didn't really feel right, but I couldn't connect the dots. And here you're showing me the charts from the Federal Reserve, and it makes so much sense. So people are starting to wake up, but at the same time, you know, I can see the importance of having a plan C. Because I have a plan A here in Phoenix. I'm on an urban farm. I generate my own food and water and all of that. I have a plan B, which is 2 hours away, and I have a bug out location that's completely off grid and large enough to support a community. But I don't think a plan B is enough anymore. I think I'm looking, and that was one of the things that my takeaway from this event was to have an additional place to go with a second citizenship or third citizenship, because this is a global issue and it's going to get very, very, very nasty. And we have to be prepared for that. And I don't know. I mean, the world has never really gone through a global hyperinflationary event and reset before. It's gone through individuals, and it's going through it in a lot of places right now. But on a global basis, we went through a global depression in the 30s, and we didn't even have technology to spread it that quickly then. Now we do. And this, I think, is going to look like a wildfire, and it's going to catch a lot of people off guard. And, you know, we traveled through Cambodia afterwards and speaking to a lot of local people, and even going to the Money Museum, which was so interesting because you could see the central bank propaganda, right? And at one point, gold and silver was part of every country's money. It's just what you used to buy things. And people really, the normal person really has no clue. And like I was talking to a guide and I was talking about inflation. Oh, inflation's not that bad here, blah, blah, blah. I said, well, tell me something, because coconuts are quite big there, right? They use them a lot. I said, well, how much did that coconut used to cost you? And he goes, well, in 2019, that coconut cost 1,000 rupiah or whatever they use dollars there too, but whatever their currency is. And he goes, now they're 4,000 rupiah. I said, well, has the coconut changed? Are you using it any different than you did before? No. So what's changed? It's the purchasing power of this stuff that changes, right? It's not the gold going up. I have a necklace that I've probably worn with you, and I bought it in 1987. And it's a gold necklace. And I remember at the time I paid $350 for it. And I recently had it appraised at like $6,500. Now, most people go, wow, and I even saw you look on your face like, wow, that's really good. But it's not the gold going up. It's the value of the dollar going down. And what that gold necklace did was it held my purchasing power intact.
Lynette Zang cautions that no central bank can stop the global crisis of confidence. The world economy is now entirely reliant on fake growth following decades of money printing and debt inflation. Zang believes that the system is clearly failing because even big media agencies like Bloomberg now support currency devaluation as an investment strategy. The fiat model's creators are increasingly acknowledging its shortcomings. She identifies a strong technical configuration in silver, a huge double cup pattern that started in the 80s, reached its highest point in 2011, and is currently finishing up its last last stage. She claims that actual price discovery based on scarcity rather than speculation will be unleashed by a breakout above $50. Leasing rates are increasing, COMEX and LBMA vault inventories are decreasing, and physical silver supplies are drying up. In the meantime, the manufacturing of solar and electric vehicles continues to drive industrial demand to record highs. According to Zang, this imbalance will cause the price of silver to soar beyond the control of paper markets. Now, let's get back and hear her following words.
And how that relationship has been playing out and the concerns we're seeing now about Fed independence. What is your take there?
Exactly. I mean, I'm not so sure that the Fed has ever truly, and actually I did a study on this, the Fed has never truly been completely independent, right? And there's such a parallel between when Nixon took us off the gold standard and Fed chair, oh God, I had his name in my head and then it just Burns, and it went out, where he pressured Burns into lowering the interest rates. So there was more money in the system. When they drop the interest rates, that's inflationary. That is currency debasement. Because of re-election and different things that he wanted to do, and President Trump's pressuring Powell to do the same thing, which, okay, we got a quarter of a point, but really that's about currency debasement, and I see an awful lot of parallels there. I do question what's been happening since January is more of President Trump's people have become part of the FOMC, and there's more pressure for that. Even so, are you ready for hyperinflation? Because that's the Fed's job, is to regulate the rate and speed of inflation. But they are absolutely losing control. And we talked about the markets and the Fed. Well, what are the markets doing? They're pushing the long rates up, right? So the markets, the bond vigilantes, right, are saying, nah, there's something squirrely here in the price of money, because that's what interest rates are, right? The interest rates are supposed to indicate the value of the money, and they're pushing them down. So the markets are stronger than the Fed. The Fed can control the overnight rate, but they can't control the market rates. And I think doesn't it look like we're in the middle of a battle royale?
Zang cautions that the goal of this interest rate manipulation is to prop up a dysfunctional system, not to promote prosperity. Central banks undermine the currency and increase inflation when they reduce interest rates. She points out that even the markets are beginning to rebel, particularly bond investors, who are sometimes referred to as bond vigilantes. Growing long-term yields are an indication that investors have lost faith in the Fed's ability to control inflation and the real worth of money. She emphasizes that while the Fed can set short-term rates, it cannot permanently control market dynamics. According to Zang, this is the final phase of a fiat cycle, which she refers to as the melt-up phase, during which panic and manipulation force markets to rise rather than strength. She thinks equities might rise momentarily due to printed liquidity and blind confidence, even in the event of political unrest or a change in the Fed's leadership. She cautions, however, that this is the last delusion before collapse. She also links this financial deterioration to a more significant change, the move to a digital currency system dominated by corporations. According to Zang, corporate interest and monetary policy have been closely linked since the Federal Reserve's founding. She warns that companies themselves will start creating digital currency stablecoins that are backed and controlled by central banks in the following stage. She claims that this will lead to a full-fledged surveillance economy in which every financial decision and transaction may be traced. Make sure to like, subscribe, and click the bell icon to get notified whenever we upload new content. We really appreciate your support.